Hi there, traders. This is Brad Gilbert with the FX Market Insight for Thursday, the 14th of January. All right, as we come through that Wednesday session out of the North America, we've got very little movement on the equity markets. All right, there's not a lot ticking away. There's a little bit of to and froing action the last few days where we saw the dollar index sort of shoot up and then drift back down through that sort of short-term support and then back up a little bit more. What that's done is it's done us a real favor on the major currency pairs. It's actually given us a bit of support and resistance across the board. So I don't think the last day of trading activity, if you haven't really got into it, has been wasted, because now what we've got on most pairs is support and resistance on both sides, especially the dollar pairs, right? The dollar index, dollar Swiss, dollar yen, dollar CAD for that matter as well. And we've got support here on euro, sterling, Aussie has got a bit of both, and support on Kiwi. So what we're getting is the market's sort of just flushing itself out around the geopolitical news, the news that they're going to try and impeach Trump. There's no major news. There's still prospects of a stimulus package once Biden gets sworn in. And that's giving us better opportunities as we go forward. So these opportunities are just building, right? So don't get disheartened if you think, well, the market's not really doing too much. It's actually just going through the process and building the opportunities coming up, right? So we've got a very clear support level here, even though it's short term on the dollar index around 90 the figure. That's something to look at as well. So if I just bring you back to the daily market insight, like trading conditions right now are a bit average, right? It's just no clear direction, no clear defined direction across the board. And that's a bit of a confusing one. That's obviously with the seesawing risk on, risk off sentiment. But when you come down, this is where you can sort of piece things together very clearly. Okay, daily change here. Well, NASDAQ was up, S&P 500 was up, and the Dow slightly down. Pretty much that's sort of neutral. So no major changes there. These things have been kicking to the top side. But if you go and look at the support and resistance on the equity markets, you'll find that there's very defined support levels now. So that's also a good thing. They could be something to trade once that equity market starts crapping out. The rest of the pairs, well, there's nothing to get excited about just at the moment. If you have a look across the daily change here on the majors, no big changes there. I mean, Bitcoin continues to be out of control, but the rest of the instruments are being quite uniform. And as I said, we're starting to get support across all instruments at the moment. They will be opportunities, whether the thing is in an uptrend or downtrend. It just provides us the opportunity. What we need to do is wait for the markets to get there and then work out whether we're buying or selling according to where that driver is coming from. So that's where we are at the moment. The market evaluation, which I've updated as well, you can check that out. Indecisive equity markets has given us a bit of range trading and put some support lines under all major instruments. So this is basically what I've just gone through, and you can check that out yourself. It's under the rates. So not a lot just at the moment, but we are building towards some more substantial moves. It's just got that feeling towards it, right? Nothing major coming out as far as economic data, and not that it's really having a major impact at the moment. The Metastock has been getting inundated with calls. They've just removed their Reuters poll from the basic Zenith subscription. So I think the more people that complain, we'll probably get that back on. It's no big deal because you can get that off a lot of retail calendars anyway. So going forward today, what are we looking for? Well, really, it's back to the US market to see what's going on. Once you have a look through the news, you'll see it's more just like articles, right? There's nothing really substantial coming up. Obviously, no sign of the central banks. And I think more importantly, no real updates about the COVID situation, right? That was frontline news. It's like the market's been desensitized and it's no longer a news item. So, you know what? If that drops off, that's a great thing for us. We get Biden in, Trump goes away, Brexit's done. We can start to really talk about the macroeconomic fundamentals again and get the central banks back involved. And that's pretty much where we are at the moment. There was one other thing I just wanted to show you was, if I just bring you back to the main page here, just notice the S&P or the minis here, they have just started up. I mean, it's not like a substantial move, but a little bit of positive tone there on the US equities, on the futures. Obviously, the main equity markets closed at this point. And that's pretty much it, guys. The not a hell of a lot going on. And as you can see, if you're looking for sort of some sort of direction, you look at the majors here, they're all sort of blue or going up. And that's a little bit weird when some of them have got the dollar pairs and others a dollar block. So that tells you that there's nothing really substantial going on. So if you're smart, I'd turn off your screens, wait for later in the day, maybe the European session and definitely that North American session. That's where things are emanating from. All right, guys, have a good one. Cheerio.